Hey guys, this is Hydra from xtrades back with another video, and in this video we're going to go over stage analysis. So stage analysis is basically an easy way to break down the life cycle of a stock, right? So within a stock, or within the life cycle of a stock, right, there's typically four main stages, and this is stage 1, stage 2, stage 3, stage 4, right? So in this chart you can tell that stage 1 is essentially the consolidation zone, right? So you basically base out for a couple months, or for a couple years, 2 weeks, right? So yeah, this stage is basically just setting up the foundation for a stock, right? And then stage 2 is when you get the break out of this base, and this is the first major breakout. And this is typically the best time to be buying a stock, right? You want to buy stocks that are just breaking out of bases and in strong uptrends, and this typically happens when a stock is in stage 2. And then stage 3 is when you basically get a little bit extended, right? And now you're just consolidating, right? You're pretty much going nowhere. And yeah, you pretty much are just topping out here, right? And then stage 4 is the actual decline, right? So you pretty much have a very, very big correction, right? Greater than 25%. And typically uh, you correct all the way. Sometimes you can correct all the way back to the initial base, but sometimes you can correct back just like 30% off the highs, right? So it doesn't necessarily have to come back all the way back to where it was before. But this is essentially how this is essentially a good visualization of the life cycle of any stock, right, given in the market. So now let's take a look at some like real life examples so that this is a little bit easier to understand. So let's take a look at SQ. So this is square or block now. Let me clean up my chart, right? And let me actually bring back this chart. So a good way to tell if a stock is in an uptrend or downtrend is to tell if it's above its 30-week moving average, right? And this is equivalent to the 200 daily moving average as well. So on the daily chart, if you have the 200 moving average, that's the same as the 30-week moving average. But essentially, this is a good, it's basically just a very simple signal, right? If price is above the 30-week moving average, that is a bullish sign, right? You're in an uptrend. If it's below the 30-week moving average, then that's a stock that you want to definitely avoid because it's either in stage 1, stage 4, or stage 3, right? So typically when the breakout happens, that's the best time to enter, right? The beginning of stage 2, and you want to ride this move all the way up until price is starting to actually chop below the 30-week moving average, right? So over here is when it actually starts chopping around, and that's a good sell signal. And you want to avoid all stocks that are below the 200-day moving average or 30-week moving average just because they are typically in downtrends or just too choppy, right? So yeah, again, this is something that this picture visualizes for us. But let's take a look at some real life examples now. So this is SQ, right? So SQ was pretty much consolidating here for almost 2 years, right? Pretty much went sideways for almost 2 years, right? And then in 2020, after COVID, this one had a very, very strong breakout. So it had a big breakout around that 90 level, right? And then this one pretty much just went higher and higher. It formed some mini flags along the way, right? Some mini corrections here. So this one from here corrected around 14%. Another mini correction here, 24%. And then some more flags here. Mini flag here. And from here corrected 20%. And then here's this is stage 1, right? This entire base is stage 1, right? And then once we break out of this base, this is when we enter stage 2. So this entire area is all stage 2 from here to here. And then stage 3 is when we start consolidating here, right? We kind of top out. There's not a lot of gas left in the tank, essentially, right? We pretty much just go sideways for a couple months here. This was, yeah, almost a whole year, but around 9 months. So yep, here we started consolidating, chopping around the 30-week moving average, right? So that's typically a sell signal. Once we are not able to bounce off the 30-week moving average, that's a sell signal, right? So here we got a couple bounces off. Here we sliced through it, and then reclaimed, and then tried to bounce off again, and this time we completely, we were not able to bounce back, right? So this was a very, very clear sell signal. So typically, I like to close my position when we get a close below the 30-week moving average. So again, this is for position trades for longer term traders, right? This isn't a strategy for day traders or even swing traders, right? If you trade mostly off the weekly chart, or if you're looking for those big moves, if you're trading those equity plays with a long term outlook, right? If you're looking for stocks to double, this is something that works very, very well. So I typically close my position when price closes below the 30-day moving average, right? So this is the first week where it actually closed below the 30-day. Here there's a couple tests, but price actually closed above. And then here was the first week where it closed below. So if this was the entry and this was where you sold, this is a 125% gain, right? So pretty good in in around a year, slightly less than a year, but very, very good gain for just very strong gain for just under a year. So this is a good example. And then here, this is all stage 3, and then stage 4 is the decline, right? And now SQ is back in stage 1. So in this example, we ended up right back where we started, right? But that doesn't always have to happen. But in this case, it did. And SQ is currently back in stage 1, right? So now it's currently forming a base, and it's potentially breaking out here if it can get going here. It's forming a nice flag. So if this breaks, then this one is back into stage 2 and should be something that we should be watching for a longer term move. Let's go through a couple more examples. Once you get the hang of it, it's pretty simple. You see these patterns again and again. So again, pins. Here's the stage 1 base, right? So it IPO'd here, and this is the base, and then this is all stage 1, and then this is stage 2, right? We had a very, very nice rally. It went from around $35 to $90, so 152% gain in 6 months, less than 6 months actually. And then again, you want to close when it closes below the 30-day moving average, right? So this would be the sell signal. So that's around 100% gain. So just to keep in mind, you don't actually have to use the 30-week moving average as the sell signal, right? You can always sell some into strength and then trail the rest using the 30-week moving average. But again, this is more of just like a guardrail than anything, right? You can sell wherever you want to, whenever you feel comfortable with your gains. But ideally, when it closes below the 30-week moving average, that's like the first tell that the stock is pretty much done being in an uptrend, right? It looks like it's going to flip. And that's exactly what happened here, right? So this entire area was basically stage 3, right? It was consolidating, it was topping out. And then this was stage 4 again. And now we're back in stage 1. So this one is back in stage 1. It tried to break out earlier in 2024, but failed. So yeah, this one's just, it needs more time here. Let's look at one more example, Snapchat. So this is another one, very, very clear, right? Stage 1 is right here. This is the base, right? Over 2 years. And then this is when we break out of the base. So this is where stage 2 starts. And this is the best time to buy. And then this one continued to go a lot higher. Went from, this is a 300% gain, over 300%. And then this is the first week that it closes below the 30-week moving average. So this is the sell signal, right? So you want to exit here. And then, yeah, so this part was pretty much stage 3. And, oops. So this was all stage 2, right? Starting from that base breakout. This is stage 3. And then this is stage 4. And now we're back in stage 1 here. So this one needs more time again. Let's do one more example. Roku. So this is stage 1, right? It's consolidating for a year, and then it had a big breakout. And then this is stage 3, and then stage 4. Here's the decline, right? And now this one is again back in stage 1. So this time it went a little bit lower than before, and this is the new stage 1. But yeah, I hope that was helpful. And yeah, feel free to DM me on Discord if you guys have any questions. But yeah, thank you guys for tuning in.
There's a reason why Xtrades is currently the fastest growing application on the market for sharing financial ideas. With over $2.5 million paid in the last 2 years to contributors, users are flocking to see what trades the top traders on the leaderboard are sharing in real time. If you're looking to grow your reputation as a trader on the internet or discuss your trading ideas with other reputable investors, click the link below and get connected with a trading mentor today, completely free of charge.